most investing crazies, you get like the smart guys, then you get the institutional buyers, and by the time it gets to like the man on the street, they're investing right at the top. Bitcoin was the total opposite, and all this crypto stuff was, I think, the first time I can remember seeing something where like the little guy on the street actually got in way earlier because of their skepticism to traditional finance and made real money.
What's up, man? Freddy, glad to have you.
Real pleasure to be here.
So you are, you work for a company.
Yes.
Are you an owner? You're the owner of the company, right?
Yeah, there's two partners.
Okay.
Muddy Waters Capital.
Okay.
And we manage a bunch of different strategies across Vietnam. We're best known for short selling. We do some stuff in mining, not crypto, shit coming out the ground, you know, picks and shovels stuff.
Like gold mining and stuff like that?
Gold mining, copper, iron ore, all those kinds of things.
Dude, gold's been on a tear.
Gold has been on a tear, and it's really funny because I go and meet people and tell them about the mining fund. They're like, oh, what do you think of gold? And I'll be really honest. I don't have a strong view. Like, there's a really good argument that it's pretty impractical, and you got to dig it up, and it's super fucking hard to dig it up. And then you go and you pay people to store it. But the flip side of that is there's this like really primitive part of us that for thousands of years we've had this shiny metal, and it is really difficult to dig up. And so it's a good store of value. I don't really have a strong view.
My view is that I think that people view gold as a hedge against inflation.
Yep.
But what it really is a hedge against disaster.
Right. The problem with that view is, though, right? Like, let's say I know you got a bunch of gold bars, and I know that you got them buried in your garden. I just need to come over with a gun. Like, that's it. Like, if you come over to mine and I've got gold bars in the garden, you're like waving around a 45, I'm like, hey, I have all my gold. Like, I don't fucking care.
True, but generally speaking, you're not going to just put all your gold bars and bury them in the garden. And you're
Right,
not going to tell people
you can
that
only
have a bunch
fit
of gold
so
bars.
many of them in your butthole to walk around. It's not super practical.
Right, but you have banks and you have vaults and you have other custody solutions.
Right, but full breakdown of society, you think that person's still showing up for like $19 an hour to guard your vault? Forget it.
This is true, which is why Bitcoin is a much more superior alternative to gold.
So I don't know much about Bitcoin, and I'll be honest, I was incredibly skeptical. The first time I heard about Bitcoin was in 2013. There was a guy in Hong Kong who I met. He was like, hey, we've basically got this token called Bitcoin, and it's going to help get money out of China. So China is a country with capital controls. You can't freely exchange the currency for dollars. So there's a number of ways that people historically have taken money out of China. One is casinos. So there's a place called Macau. It's a former Portuguese colony. And a bunch of the US casinos, they set up like operations there. So Wynn, MGM, all these guys. And what happened was you can't legally gamble in China. So what guys would do, and so gambling debts are also not enforceable in China. So you had a thing called a junket, which was basically a bunch of gangsters onshore that would say, look, we'll advance you credit offshore in Macau, and if you don't pay, we're gonna, you know, you're gonna pretty quickly learn how to fly off like a 50-story building. So they would turn up to like Sands, Las Vegas. They gamble like $1 million, and then they say, oh, you know what I want to do? I want to transfer my credit to your US branch, and I'm going to get a visa to the US, I'm going to go on a holiday, and they'd walk out the casino with like $10-20 million, and a bunch of that would find its way into high-end real estate in California, in New York, and all these places. So I met this guy, and he was like, we're going to have an online Bitcoin casino, and it's going to be a way more efficient way for Chinese guys to get the money out. So I was like, huh, that's like really interesting. Bitcoin was trading at probably like sub $100. Now, did I buy Bitcoin? No. If I had bought Bitcoin, what would have happened? I'd have probably bought it at 100 and sold it at like 120 and been like, oh man, I did so well on Bitcoin, I'm so smart. And then sat there for the next like 5 years bitching and moaning about how I didn't really make any money on Bitcoin. So I'm kind of glad I didn't buy any Bitcoin. I'm a no-coiner.
You're still a no-coiner?
I'm still a no-coiner.
After being in finance for, how long have you been in finance for?
15 years.
You've been in finance for 15 years.
Hardcore no-coiner.
And you're a hardcore no-coiner.
So this is the thing. I believe that enough people believe in something, like, it kind of becomes a thing. But I don't know if the thing. So it's, and I'll credit my business partner for coining
I'm
this.
shocked to hear this.
So my business partner is like, it is a thing that transacts that has no. I'm good, thank you. That has no intrinsic value. Okay. And it doesn't really have any intrinsic value, other than the fact that, like, you agree and I agree that other people will buy it off us for a certain price. Like, there's no cash flow associated with it. There's no utility.
Okay, wait. Hold on. I get where you're going with this. Is there cash flow associating with gold? And
no, equally.
Is there cash flow, or is there, like, why is there utility with our fiat currency system?
I agree.
That's
there
being
isn't.
printed out of nothing.
There isn't.
So when it comes to use of money, I would assume I'm not an expert. I drive a tricycle for a living, so maybe take what I say with a grain of salt. But I would assume that, like, the form of currency that becomes progressively more difficult to produce every 4 years through computational power and easy to verify through nodes and through the new technology. And the form of money that's easy to send.
Yep. So I don't disagree.
Would be a better form of money than what we have right now.
I don't disagree with much of what you're saying. The key Achilles heel for me on the Bitcoin argument is that, like, so at the moment, like, we're saying Bitcoin is like the standard, like the gold of, you know, the OG. But there's nothing to stop you creating several of these other decentralized currencies, and there are multiple, and there's all the coins and protocols and all this stuff. And so for me, I look at it and I'm like, I agree, like, gold doesn't cash flow. Like, the only reason that gold has, like, any value, and I don't have a strong view on, like, whether gold should be priced at $1,000 an ounce or $10,000 an ounce, is we've been doing it for thousands of years. Bitcoin's been around for what, like 15 years?
Yeah, about
give or take?
Yeah, 7.
Okay. So, like, it's just not a very long period of time. But look, do I like turn my nose up at people who are like, hey, I've got like X% of my portfolio in this, like, highly speculative asset that has very, very low kind of, like, absolute amount of them in the world? I'm like, no, it's no dumber than art or any of these other asset classes.
Listen, my view is this. I think that the currency with a pre-programmed fixed supply that gets harder to produce every 4 years, that's super easy to verify because of low block sizes, and that you could send to somebody that you could send to anybody around the world in 10 minutes, seems like a good thing to.
So, you know, this is the honest thing with the whole, like, oh, you can send it to anyone anywhere in 10 minutes. It's actually not that easy. Like, most times that, like, I've spoken to people, like, oh, have you ever sent it to anyone? And they're like, no, I just buy it and I keep it.
I've sent it to people.
Okay. But also, the banking system is not that fucking bad. Like, I can do a wire transfer for free to, like, anyone, and it gets there in, like, an hour, a day. Like, do you really need to send money that quickly to anyone? Not that often.
Sure. I'm just making a point as to why why you could consider it to be a form of money.
I get it. Like, I'm not anti-Bitcoin.
I paid an invoice,
I just
Freddy.
don't own any.
And look, I'm not trying to, like, drop orange pills or anything like that on you. Like, we're trying to talk about the macro landscape.
Sure.
And my whole view is we're discussing where Bitcoin plays into this changing economic landscape.
Yeah.
That being said, I have a guy, my buddy Jim, owns a company called Cascader. It's an AI company. Okay. And he has a search tool called pullitupjamie.ai.
Yep.
And basically it's like ChatGPT, but it's totally, like, privacy-based. I'm not gonna say decentralized because he owns the company, but it's a privacy-based, non-KYC AI.
Okay.
That's non-biased, right?
Okay. What do you mean it's non-KYC?
Like, I don't need to. Like, I could set my Lightning wallet up. I don't need to give my bank info. I don't need to give my address, my name, or anything. I just send him. You know, I
so
use my Lightning.
Drugs and pornography.
Yeah. Only drugs and pornography.
Okay.
Yes. Yeah. Obviously, Freddy. But anyway, the point is, I pay him like $50 a month to help clip my podcast.
Okay.
Right. To help me find clips after the podcast is out.
Okay.
So I could, like, if I find a topic that I want to talk about, I could find really easy the clips. Right. He sent me a $50 Lightning invoice.
Yep.
Paid it in 3 seconds.
Okay. Yeah. Again, I'm not turning my nose
Pedicab.
up.
I get Bitcoin payments all the time. I'm like,
I don't think
discounts,
there's.
I get the payments like that.
I don't think there's no utility. And I can totally get people having some small percentage of their portfolio in Bitcoin being like, hey, it's scarce. It's a little bit, it's got like qualities of it like a religion, like except the more people you convert to the religion, the more the value of your Bitcoin goes up.
Well, so that's another thing too.
Which is great, I think.
Freddie, so that's the thing, right?
It's cultish.
Here's why I think that that's not necessarily. Here's why I don't think that's necessarily true. Because
I'm not saying it in a bad way.
No, I know, but here's what.
You think every cult ends badly, all right? That's because you're not the guy that's having sex with everyone else's wives. Like, I know now, every single Netflix cult thing, I'm like, all right, we're about 4 episodes in. When is this guy going to have sex with everyone else's wife? Like, that's how every cult ends. But if they just end these things 6 episodes in and everyone goes their separate ways, it's not so bad. If you just stop it before you're drinking freezer coolant and banging everyone else's wives, cults aren't such a bad thing.
Well, sure. But let's then talk about why more and more people are joining this cult on an everyday basis.
I think it feeds in a little bit. So I think what we've seen change for our generation. So I'm 37. So how old are you?
I'm about going to be 39 in June, actually.
So I think if you look at our generation, we were reasonably hard done by in terms of timing with the way 08 happened. So most of us were kind of 1-2 years out of college if we went to college. And so we had this really, really shitty job market. Like maybe you just about got a job for a year or two and you lost your job, or you were leaving what was a really tough economy, right? So until like 11, 12, the economy didn't really pick up. So the first few years of your career were pretty tough. A lot of my friends took jobs they didn't really want out of college. It wasn't like today where, you know, if you're smart and you went to a decent university, you have your pick of, I don't know, you're going to biotech or AI or finance or people throwing money at startups. And so I think what happened was there was this real distrust with traditional finance that grew up. The traditional, like, oh, I'm going to save a little bit every month. I'm going to put some money into my Charles Schwab account. The other thing that really fucked us was we weren't far enough into our careers to, even if things didn't go really well for us, like you could buy cheap assets, right? Okay, well at least I can get on the real estate ladder and buy myself like a decent starter
And so here
home.
comes this thing called Bitcoin, and people pile into it.
And so you have, well, I think it's not so much here comes Bitcoin, but I think it's a feeling of I can't get onto that first rung of the ladder. Like, because I can't save money every month, I can't get into that traditional mindset of I put a little bit aside every month and I'm able to like make 10, 12, 15% a month. So by the time most people in our generation had enough disposable income, it was already 2015, 2016, 2018, and we feel like, oh, we've missed the run, right? Because markets had really recovered and then some by that point. Real estate had recovered, so you kind of miss out on buying the low. You miss out on actually being able to get some capital appreciation, and you're thinking like, wow, like, you know, I don't want to be like the guys in '08 who started putting money in at the top. And so I think there is a much more nihilistic view to investing, where people don't view it as building wealth over 20, 30, 40 years. They view it as, I want to get rich quick. And Bitcoin was the first asset class that I can honestly really think of where the average guy on the street was able to participate. Most investing crazies, you get like the smart guys, then you get the institutional buyers, and by the time it gets to like the man on the street, they're investing right at the top. Bitcoin was the total opposite, and all this crypto stuff was, I think, the first time I can remember seeing something where like the little guy on the street actually got in way earlier because of their skepticism to traditional finance and made real money. So that for me is super interesting because I've actually never seen that happen before. And so I think that has fed into like the meme stock craze where people see a lot of parallels between Bitcoin and all these altcoins and shitcoins. And I think it's actually fueled a really unhealthy mindset towards investing amongst people of our generation.
I actually agree with you.
I can see you're in shock.
No, I agree with you fully, Freddie. I think that the big problem that we have is that we are conflating meme stocks
Yeah.
and meme coins with a hard asset that has been proven to have intrinsic value.
Right. I agree.
And Bitcoin is a hard asset that has been proven time and again to have intrinsic value. And I also think that with this new macro landscape, you're going to see Bitcoin over the next 10 years emerge as the go-to reserve asset for many foreign countries and sovereign wealth funds. But these shitcoins, they don't have a pre-programmed fixed supply.
Yep.
They don't have like a proof of work consensus necessarily. They're still early to the party. And
Yep.
if they try to imitate Bitcoin, they're just like the Walmart knockoff version of Bitcoin. And if you already have Bitcoin, why are you going to replicate something that already works? And then a lot of these other meme coins are just straight up scams.
Yep.
Straight up, they're not even decentralized. They call it decentralized in name only. It's like me wearing a dress at the city council meeting and saying that I'm a woman. It's the same thing as calling this stuff decentralized finance. It's not decentralized at all. I think that the unhealthy thing that you're concerned with, which is fair because I'm concerned with it too, is that people are conflating outright scams with Bitcoin, and as a result, the average everyday person on the street will associate Bitcoin with being a scam, and then they get left behind in our fiat infinite QE world that we're living in.
Right. And then the other thing is as well, I think there's this idea of like a level playing field, okay? There's this idea that like, oh, it's so unfair. Like the professional investors, so people like us who run funds, have this unfair advantage over the retail investor. And let's be real.
Well, you kind of do.
So let's be real. There are two advantages. One is in terms of resources, okay? In fact, let's start at the beginning. Let's look at time spent, okay? If you are spending an hour a day doing something, or an hour a week doing something, and I'm spending 10 hours a day immersing myself in something, I am likely to be better than you at it, okay?
Yeah.
So Lance Armstrong and I don't have an equal playing field when it comes to riding a bike. Like, he is genetically, like, far superior in terms of his ability to turn, like, his body to process oxygen. He's spending a lot of time doing performance-enhancing drugs, and he's also training, like, 5 days a week, okay, or 7 days a week. So to think, like, that I could just get a bit of EPO and ride around the streets of Austin and be like, oh, why is it unfair that Lance Armstrong's, like, faster than me? No one's going to take that and say, like, yeah, you should be able to be as good as Lance Armstrong. Now, I'm not saying I'm the Lance Armstrong of investing, but I'm just taking it as a parallel and saying, like, yeah, of course it's not a level playing field. The other thing we should look at is, like, resources. Like, yes, because we run money and we get a management fee, like, we can afford to buy certain services, whether it's credit card data or macroeconomic think pieces that are going to allow us to spend more time and have a smarter, more nuanced view. It doesn't mean I'm guaranteed to win, but it does give me a slight informational edge. But it's pretty small, that edge that we're looking at, and lots of other very smart people who do what I do have access to that information as well. So I think the problem is people are conflating unfairness in the economic system, which I think exists, with unfairness in outcome in investing because we have a slight informational edge. And they take that and they say, oh, well, it's just unfair, so I shouldn't begin to think about this sensibly. I should spend my time looking at meme coins.
Yes, and now here's the other question. How much time do you think the average Bitcoiner spends studying macroeconomics?
It's a good question. I don't know how much time they spend studying economics versus looking for reasons to say that they're right on Bitcoin, okay? Most of the time when I sit down with someone who's really into Bitcoin, my general counsel actually is a big Bitcoin dude. Like, he should probably be getting interviewed here, not me. He loves Bitcoin.
Well, then bring him on next time.
Definitely. And I don't know if he spends his time looking at macroeconomic data to say, like, hey, am I right or am I wrong? Or is, like, am I getting directionally more correct or directionally less correct? Or is he looking for the same data points to be like, that's proof that Bitcoin,
bias, right?
Yes. And look, I don't know if everyone does that. Like, look, our fund are best known for short selling. I don't know if I look at most macroeconomic pieces of data and say to myself, like, is that more confirmation that, like, actually the consumer's getting weaker and these tariffs are a terrible idea? And, like, does that also just feed into my own confirmation bias of what I own in my book or what I express? So I don't think I would criticize Bitcoiners for doing that, but I have noticed a lot of them fixate on money supply. They fixate on these other fiat elements that support their view of Bitcoin.
Can I have a question?
Sure, go for it.
So, I don't understand how people say that Bitcoin is decentralized when you clearly have people who got in at the beginning and bought bought it at like $2, $3,
Yeah.
11, and then they bought mass amounts of it. You know what I mean? And then you have financial institutions getting in with like $1.5 billion. It doesn't feel like a decentralized currency.
I can tell you why very easily, John. And it's because no one entity controls over 51% of the supply. That's
like, that still means that if you control 20% of the supply,
but
you're
that's
still
not
controlling
that's
a lot.
decentralized, right? In order to verify. So, no, you have a good question though. Like, in order to verify a transaction, every single person on the network has to verify whether or not the transaction is
bona
valid.
fide.
Yeah,
Interesting.
is valid. And no one entity, if you have like a non-KYC wallet, or
Yep.
if you're sending it from one non-KYC wallet to even a KYC wallet, right?
Yep.
No one entity can block your transaction from being sent to another person, which is what makes it decentralized.
Interesting.
That's why, John, right? Because with fiat money, right? Like, let's take a look at the Canadian truckers
Yep.
for an example. You know, Justin Trudeau was freezing bank accounts for people that donated money to the truckers when they were doing their protest.
Mm-hmm.
When they got their Bitcoin donations, you couldn't freeze any of that.
Interesting.
So that's actually the big reason why it's decentralized. The difference between Bitcoin and these other coins is that, you know, these other coins have like a board of directors.
Right.
They have founders. They have partners. They have they'll have people, even especially if you look at the memes and look
Yep.
at the wallets, look at everything on chain, which is transparent. You'll see people that control like 60% of the supply. You'll see
Right.
one person controlling like a large amount of the supply.
Yep.
Right. With Bitcoin, the highest concentration of wealth holders hold like less than 10%. Even like Michael Saylor, like one of the richest Bitcoiners in the world, because MicroStrategy's been buying Bitcoin up left and right.
Yep.
Like, even if Michael Saylor decide to sell off his Bitcoin, there would still be like 90% of the supply. Like, only like 2 or 3% of the supply, the existing supply, would now be like liquid enough market.
What do you think of Michael Saylor?
I think that he's exploiting sort of a glitch in the financial system.
Yep.
But you also don't know how long you're going to be able to do something like that for, and there's risks. And
The leverage is pretty dangerous.
Yeah. I mean, it's a while. Like, in order for him to get margin called, Bitcoin has to drop a ton.
Yep.
I don't see that happening in the next few months. I also think that being able to sell, like, the more Bitcoin Saylor buys, right, and the higher Bitcoin goes, the higher the MicroStrategy stock goes. Michael Saylor could then sell his MicroStrategy stock,
So it's
and then buy more
reflex-
Bitcoin.
Yes.
So
it
there
is
is. I
reflexive.
understand the business model from
Yeah.
it, and I think that as a result of that business model, you could see MicroStrategy, not financial advice, right? You could see MicroStrategy getting up to like $1,000 a share, close to that during this bull cycle. That being said, when Bitcoin has its inevitable 70% correction later on, you'll see MicroStrategy drop like 80%.
Yep. That is true. I don't know. He just looks like a grifter to me. But he was there first, and the structure works.
I think a lot of other companies are going to follow suit.
So there've been a few like Me Too-ish guys who've tried to do it. Generally speaking, they just don't have the panache, and it's kind of like, if you want to play that game, you may as well play it with him because it's more liquid, so it just makes more sense.
Well, also, the people that are doing it, a lot of the companies that started doing it are doing it now.
Yes.
Like in kind of peak bull cycle, and we've already had a
GameStop.
correction.
Yep.
GameStop, Rumble, all these companies. I don't think we've really hit peak bull yet.
Yep.
So I think that we have to kind of wait until like December or November or the end of Q4 to really make a decision as to whether or not it's a viable strategy or not. I do think that these trade deficits that the trade deficits that we're running, and the tariffs, and these Mar-a-Lago Accords and this macro landscape that's happening, you're going to see a really profound use case for Bitcoin that's going to come about in the next.
All right, let's talk about trade deficits. why a trade deficit's bad, right? Like, I go for a haircut. All right, I meet the barber. I pay him like whatever it is, $75, and I have a structural trade deficit with him because he doesn't want to buy anything from me, and I only want to buy haircuts from him. And so, I can't sell him a pair of scissors or shampoo. Like, I have a structural trade deficit with him. Why is it a bad idea?
I don't necessarily think that trade deficits are necessarily that bad. I just think that the margin of how we're running our deficit is a little bit too high, and we should probably close that margin.
But it's like the most exorbitant privilege ever that we have countries that manufacture stuff because they have a massive absolute advantage in terms of labor cost. They sell to us very cheaply, so we can buy all the shit we want really cheaply. And then they take our dollars that we recycle and they buy treasuries, so we can basically run up like a massive fiscal deficit, and that just recycles forever and ever.
It recycles
why is that a bad
forever
thing?
and ever until it doesn't.
Right.
Okay.
We're not at the till it doesn't point.
Yeah.
Yeah. I mean, the biggest crime for me over the last 10 years economically that we committed was not terming our debt out. Why we weren't out there doing like 100-year bonds like the Austrians, I have no fucking idea. Like, that was the most no-brainer trade on the planet to term it out. Like, why are we?
I don't even know that. I don't even know what that is actually.
So
explain it like I wear a mask alone to drive my car.
So, when you issue bonds, you could issue bonds that are 1-year bonds, 2-year bonds, 5-year bonds, 10-year bonds. Now, and typically, like, the U.S. issues a lot of 10-year and 30-year bonds. If you're going to issue a bond that has, like, 1% coupon, okay, and someone will basically say, like, look, I will pay you 1%, for 10 years. The U.S. government will pay me 1% over the next 10 years. If someone is prepared to accept a 1.5% for 100 years, the value of that bond, so the value of the U.S.'s liability to that person, is going to massively decrease if it is a 100-year bond and the interest rate goes from 1%. If interest rates go from 1% to 5%, the value of that bond is going to go from being like 100 to like 20 very fast. So the U.S. basically sold bonds at 100 and can buy them back at 20. Instead, we issued 10-year bonds, 20-year bonds, 30-year bonds, and then when interest rates have gone from 0 to 5%, the value of our liabilities is only slightly decreased. So why we didn't do that, I just don't know. They should have termed everything out. So Austria, I'll have a look at the Austrian bond. So Austria issued a 100-year bond. Have a look. Yeah. The Republic of Austria.
Closer to the mic.
100-year Republic of Austria 100-year bond. At issue, that was at 200 euros. It is now at 65 euros. So that's what we could have done. We could have bought our debt back now at 25 cents on the dollar effectively.
But then why would these countries want to buy 100-year bonds from us knowing that would happen?
So it's kind of retarded. It was during a time when, people thought rates could stay lower for longer, and so the value of that bond in theory could go up. But it's pretty insane that investors did that.
Yeah, the idea of any country buying a 100-year bond seems kind of retarded too.
Yep.
It also shows the pure retardation of our fiat system.
Correct.
That is another story. It also maybe adds to the use case for a better reserve asset.
Which is
Bitcoin.
Bitcoin.
Yes. Let's talk about these trade deficits though. Here is where I think like the tariffs kind of play in, right? And this is why I think the tariffs can be inflationary. And I think that when you start tariffing, when you become a tariff nation, right? When you start relying on exports instead of imports, you need a weaker dollar. You have to have a weaker dollar, right? Like that's basic math.
Yep.
And the inflation is not going to necessarily happen because you're going to pay a little bit more for goods, because there's usually something that offsets the currency, or you expand manufacturing, or you expand production in certain areas, and some other country works out a deal with you, and then all of a sudden now you get really cheap goods from somewhere else, or you're not having to pay as high tariffs to send your stuff to another country. But what can happen is if you start tariffing and going super hard on these tariffs, well, in order for that to work, you have to weaken your currency. You have to weaken your currency,
right?
When you tariff, that's really what it is you have to weaken your currency whenever you tariff goods and services. If you don't get currency offset, as a result of that, you will start getting inflation. As a result of something like that, you start dealing with economic hardship. All these other things start happening. People start losing faith in U.S. dollars. They're gonna smarter people, smart money, smart investors. They're gonna gravitate towards something else. The something else is gonna be the hard asset with the fixed supply. With a fixed supply that gets harder to produce every 4 years. A lot of other countries, I don't think that they're very happy having to rely on exactly, straight fiat. Like, I don't think a lot of other countries.
So I think tariffs are going to be very inflationary. I
don't think they're going to last very long, though. I think that, like, I've been listening to Scott Bessent talk.
Yep.
And I've also been reading a lot of, like, the reports, like the pre-inauguration reports, like from Trump's team. It was like a 40-page report. Actually, I read it. I plugged it into an LLM.
Okay.
Every 2 pages, I just plugged it in to summarize in, like, really basic terms.
Yep.
And basically, like, the whole plan is to use currency offset, hope that these other countries devalue their currency so they can start producing their own goods, their own goods at home. No, it's become more consumers instead of producers.
Yep.
So they can get cheap goods, and then, like, our dollar winds up getting weaker, but these other currencies get weaker too, so that offsets the effect of the tariffs.
Let's take a step back. The problem is this, right? We've outsourced a lot of low-end goods to Asia. We don't want to bring that back. Like, Americans don't want to be making, tube socks and trainers.
But why? Like, if you live in the middle of Ohio that's overrun by fentanyl and drugs and opiates, why would you not want manufacturing or factories back in those towns?
Have you ever been to, like, a sweatshop? It's not nice. Like, these aren't jobs we want. Like,
but we've had mines, and we've had a lot of blue collar. We had a lot of factories, and a lot of these factories got outsourced.
You ever been down a mine? It's fucking horrible. Like,
no,
these are not like so. Wait, hold on. So let's take the low-end goods manufacturing. If you make that stuff here, firstly, the quality is far lower. These places have invested significant amounts of technology into manufacturing, or for garments and things like that. But let's say we could bring all that technology here, and we could, get the scale and the looms and everything going. The other issue you're going to face is if you want to pay a U.S. worker $12, $15 an hour, price of your Nike sneakers are through the fucking roof, okay? So that's one issue. Then, let's take something like Apple, right? Well, you say, okay, we want to build iPhones here. iPhones are not manufactured in China just because it's the cheapest place, okay? You need tens and thousands of, like, reasonably skilled laborers to build that stuff, okay? We haven't churned out enough engineers for the last 25 years. Like, everyone's going to these, like, wacko liberal arts schools where they're, like, changing the names of the school, and, there's safe spaces, and everyone wants, like, gender equality and to, like, worship Hamas and all this other shit they're doing. Like, we aren't churning out the right kind of degrees and things to do that. So the idea that we can just, like, click our fingers, tariff it, and then people are like, we're going to spend, like, $20 billion building factories here. Like, we don't have the labor.
Yeah, that's not going to happen. No, I agree. That's not going to happen. It's a multi-year. If you're going to do something like this, it's a decades-long process in doing that. I do think that there's one factor that we're missing, and it's humanoid robots and AI. And I think what Howard Lutnick and Scott Bessent have been saying, I know you're not a big Howard Lutnick fan, but what they've said and what's been talked about is that they're going to use a lot of humanoid robots to manufacture a lot of this technology.
Let's be real. Everyone knows what the first thing that these humanoid robots are going to be used for. It's not going to be factory work. It's going to be fucking. We all know that, okay? Just how, like, the internet was created for porn and gambling. Like, genuinely, a lot of the stuff with high-speed internet and payment processing on the internet was just driven by gambling and porn. That's what the humanoid robots are going to be used for first. I have zero doubt in my mind.
Fuck a humanoid robot, and how would that work?
A lot of the incels. A lot of the incels.
Like the groypers, they're gonna just start fucking humanoids. But how, like, would you get like a real vagina? Like, how would that even?
I haven't thought about it in detail.
No. Let's actually think.
Yeah.
Let's game this out right now, Freddy. Let's game this out. How would this work?
I think you're gonna get a combination of LLM type response, AI like stuff, super advanced flashlights, and probably like some sort of realistic fembot. So I think we're at least going to get to a level of the fembots in Austin Powers probably within the next decade.
Okay, that's fantastic. Now, who's going to make those? Like, what is going to be used to make those fembots?
I don't know. I imagine like Elon's going to be pretty early in that.
What else? Like, what is a technology that we're going to need to invest in order to make humanoid robots that fuck?
I don't think it's just it's a combination of like the stuff we've already got, I'd imagine, right? Like it's the flashlights, the LLMs, so they can like talk back to you and stuff, and then it's just like getting them in the right
to make
positions.
to make the body parts, to make like the titties look real, to make the vagina look real, to make all that stuff feel like you're actually fucking a chick.
Yeah, I mean, look, I'm not a connoisseur, but I think there's already like in Japan pretty high end like sex dolls.
I'm just saying this because we're looking at this from a monetary standpoint, right? We're just looking at this totally objectively. Right. Let's say that you're correct. What materials are going to be used to make this highly believable fembot humanoid robot that serves as a
probably some silicon, some basic hydraulics, and then reasonable LLM.
Okay, so what companies do you think are going to like be on board, or what sector do you think is going to be on board to start producing this?
I'm not sure it's going to be like the greatest public markets product. I got a couple friends in Hong Kong that manufacture dildos and other sex stuff. I mean, it's probably going to be all these private guys who scoop in and are just like, adding the AI components that can interact with you.
Now, let me ask you another question.
Yeah.
Are these humanoid robots going to accept payment?
I don't know. I feel like it'd be like a one-off, right? Like you buy your robot and then maybe you need to like get the software updated once in a while.
Maybe, but like if you're gonna see these robots, right, and you're gonna be like using robots for sex,
yeah.
The robots eventually look. If you're a robot and you can have sex with another human being and interact like a human, you're gonna also want to transact and have money and develop human characteristics. What are they gonna want payment in?
I mean, I'm not sure you're gonna want to take your robot out for dinner if that's what you're getting at.
Potentially, but like, what do you think these humanoid robots are gonna want to accept payment in?
I'm not sure they're going to need payment. Honestly, I think it's going to be like a one and done. And then if you are looking for updates and other bits and pieces, you maybe get into a world where you're just paying the corporation that owns your robot.
Sure. I also think that there's a very real possibility that these robots are not going to want fiat dollars and might want to accept Bitcoin payments instead for a service like that. I think that when it comes to LLMs and robots making and producing things and AI agents, I think AI agents are probably going to prefer the currency of the known proven valuable currency of the internet over what we have now. I think it's a possibility.
Jury's out.
What?
Jury's out on that one.
Right. But the jury's out. You know what that means about the jury being out?
Go on.
It's not a no.
It's not a no.
It means it's not a no. And if it's not a no, it means that there's still room to invest in something like this.
So if you're an incel and you're watching this and you don't already own Bitcoin, I think the key message here is to buy Bitcoin just in case the humanoid robots only accept payment in that.
You know what? It's not. It sounds absurd and ridiculous, but we do live in a world that's dominated by absurd and ridiculousness, and so nothing would put it past me.
Another use case for Bitcoin. There you go.
Another use case for Bitcoin. Okay, Freddy, how do we get a hold of you?
Our office is at 714 Congress. Please don't come because we probably will think you're insane. There is it's not so easy to get a hold of me. I like it that way. But if you message Alex and you're interested, I'm sure you can give people my details.
And we have Muddy Waters Research, right?
Yes, the website is muddywatersresearch.com. That's where you can see the short reports and other stuff we do in the space.
Which is actually fascinating, and it's good to read this stuff to understand where the landscape is and how people feel about different scenarios in the future.
Sure.
I wish we talked about this a little bit more about what the smart money is doing, because I actually do read reports. I read like Morgan Stanley reports
Okay.
and read and when I like listen to like Lynn Alden or Darius Dale or people like that, it's hard to understand it, like the fancy economic jargon. But you can take the transcript of
You can take that stuff out and honestly spit it into Chat GPT and say, like, explain this to me like a 9-year-old.
Yes, that's what I do.
Okay.
So I think that LLMs are actually going to change how people invest in a very drastic way if people start using them.
I think Twitter has, amazingly like democratized finance, because if you go back 20 years ago, most of the kind of smart stuff was in a Morgan Stanley report or a Goldman Sachs report they sent out to their clients, and now there's like incredibly smart fund managers, economists, people who write newsletters who broadly disseminate their ideas on Twitter, and I think that's great, because I actually think that opens it up to people who do want to do the work and follow people and be thoughtful to have a place to go.
It's capitalism in the purest sense, the way it should be.
Yeah.
And the reason I'm able to even have a semi-intelligent conversation with you about this is because I follow accounts like that.
Yeah.
You can go out, there's a lot of bullshit, there's a lot of noise, there's a lot of nonsense on X, but economically, the economic advice that you can get on X if you find the right people it's an amazing
really
opportunity it's very high level. Like if you're following Dylan LeClaire, Marty Bent, Quinn Thompson, Will Clemente, Lynn Alden, Darius Dale, Pomp, you could learn a lot, and you could almost wind up leaps and bounds ahead of the traditional finance world, at least right now.
Agreed. Cool.
Okay, Freddie, thank you.
This was a lot of fun.
A lot of fun.
Thank you for having me, man.
Absolutely.